Money, money, money. So the Federal Reserve just raised its benchmark interest rate by 0.25%. And that may not sound like a lot, but it's the most significant emergency action the Fed has taken since the start of the pandemic. Yes. Now, the move comes as the Fed battles stubborn inflation and a banking crisis. And it means that the federal funds rate now sits at a range of about 4.75 to 5%. That's the highest it's been since 2007. Now, the Fed is taking this action because it's highly attentive to inflation risks, and it wants to make sure the U.S. banking system remains sound and resilient. But don't worry too much. The Fed says that recent developments are only likely to result in tighter credit conditions for households and businesses and to weigh on economic activity, hiring, and inflation. The extent of these effects is uncertain, so we'll just have to wait and see. One thing we do know is that the Fed is setting the stage for ending its rate hiking cycle. So this may be the last increase for a while. Instead, the Fed statement says that some additional policy firming may be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. The Fed is also planning to continue its current balance sheet runoff as planned. So, what does this all mean for you? Well, if you're planning to take out a loan or get a mortgage, it might be a little bit more expensive now. And if you're saving money in a bank account, you might earn a little bit more interest. So that's good. But don't worry too much. The Fed is closely monitoring incoming information and assessing the implications for monetary policy. So they'll make sure everything stays on track. All in all, it's just another day in the wild world of finance. But hey, at least we can all feel good knowing that the Fed is doing its best to keep our economy stable and our wallets safe. What do you think about this latest development? Let me know in the comments section down below as always. And don't forget to follow, thumbs up, like, and subscribe for more updates on the wild world of finance. Thanks for tuning in.